It's Andy Kim again. Today this is going to be a last lecture in this semester, right? It's already week 14, and week 15 you will have to do your final exam. Okay, are you ready for that? All right. The coverage of final exam will be everything you learned throughout the semester. Of course, it has to be, right? That's final exam. Number two, the logistics. It's going to be online exam, so make sure you log on to iCampus. Okay. Number three, the question styles, right? They will be all multiple choice questions. Okay. Some of you may say, screw it, MCQ, multiple choice questions, so that's unfair. This is, everything you have, I want to write down all I understand. I know the concern, but we had enough of essay types of reports, right? Your essays for bankings, and then your homework and your midterm reports, all these things, right? Had a lot of written component in it. Okay, realistically, the limitation of the iCampus exam system is that the questions has to be randomly shuffled. Okay, and then it will crunch you by time. You will be squeezed like crazy. Why? Because there is always a concern that somebody may cheat. Okay, if you are left with enough of time, okay, then you will start to think about, ooh, how do I call my friends, and then how do I get a better answers, or heard with the crowd kind of things. So we have to prevent that kind of cheating. What's the best solution? Well, it is to give you a lot of questions, and those questions given by the computer. So much so that once you solve and then type in enter, okay, punch enter for the first question, you moved on down to the next question. No chance of going back to the first question. Okay. Otherwise, people will come back and ooh, my friend did answered part B for question number 1, so I have to go back and correct my answer or change my answer. No. Okay, that's why we want to do it in non-recurring fashion. Okay, and then the questions will be randomly shuffled. Okay, so for you, the number 1 questions, somebody else may face that same question in question number, I don't know, N. Okay, random. And then the choice of these questions, A, B, C, D, choose which one is the best, or which one is incorrect, or which one is correct, right? For question number 1, for you, the correct answer may be A, but for somebody else, right, the correct answer with the same problem, okay, the correct answer may be C, okay, randomly shuffled in that way as well. And there will be a lot of questions popping up to you. So make sure you log on to the system, iCampus system, on time. Okay, most of it will be multiple choice questions, I'm afraid. Some of them, okay, because there is a concern, I understand your concern. MCQ is not everything, I know, in life. Okay, but so I'm gonna see if I could make some written questions. Okay, but the thing is, the written question, it has to be short answer questions, or how do you say, the level of difficulty or time commitment has to be evenly spread out, because it has to be randomly, okay, circulating to you. Make sense? So that's why I'm trying to avoid long questions. Okay, So it will be short answer, either short answer questions or MCQs, right? So get ready for that. I have to make sure about it. The question times 90 minutes. Okay, 90 minutes. How many questions? I don't know. Okay, I don't know. Many, 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 many. That is the exam policy of the university. Okay, I told you why, right? So please understand. And then that means don't get stressed out. Don't try to kill me simply because you are crunched with time. Andy, bad guy, because you gave me so many questions. No, right? You may complain, I didn't even have a chance to look at the last questions or last 2 questions or last 10 questions. Everybody will be the same, okay? Nobody will be able to complete that exam, okay? That is what it is supposed to be, okay? So don't get pissed off too much, right? That means mind control is important, okay? Mind control, reasonably manage your time, okay? Reasonably manage your time, so much so that you will be able to move on, okay? Perhaps if I were you, like I would not spend more time than 5 minutes on average, right? Yeah, right, 5 or less, okay? If you spend too much time, more than 5 minutes, perhaps better to move on, okay? Yeah, so that will be it. Final exam. The chapters that we're going to cover, yeah, everything that we learned in the semester. So whatever we cover today, okay, will be on exam, okay? So get ready for that. Chapter 14 is what I'm going to cover today. And I will cover trade finance, which is chapter 20, okay? And then if time permits, I'm going to cover chapter 13 as well, international equity market, because that's a short chapter enough, right? Chapter 14, why do I cover this? Because swap is a very important and popular subject in international capital market. And, and Mr. Jo Jong-hwan that we're going to meet today, or June 9th, right, in the evening, right? He's the best expert in this swap related international capital market, and then derivatives and fixed income and foreign exchange, okay? So if you exclude the swap, okay, you will not be able to talk with that kind of experts, right? So we need to have some basic understanding of it. And lo and behold, you are meeting the very best guy among Korean people, at least, right? And as I said before in the introduction, Mr. Jo Jong-hwan is the the highest ranked guy I've ever seen who got promoted as a Korean, okay? Especially in the headquarters of global investment banks, okay? I don't know, I have to make sure and pray that the meeting will happen, okay? I'm trying my best. But he's an extremely busy guy, so there's no guarantee. But let's hope for the best, okay? So, this week, chapter 14, interest rate swap and currency swap, we're going to talk about it in detail, all right? So before we move on further, and let me tell you why we have to bother studying interest rate swap, okay? Personal story. During my MBA days in 2002 in Minnesota, okay, I had a wonderful Pakistani friend who was also my, how do you say, housemate, because we were living in a dormitory, right? And then a close classmate, right? Ahmad, yes, my good old friend from Pakistan. At that time, I freshly learned about racquetball. Okay, I never learned about it in Korea. And then we talked about this kind of sports, and then eventually we ended up talking about squash. And then my friend Ahmad was very proud of one sportsman called Jahangir Khan. And unfortunately, I did not know about Jahangir Khan, okay? Because, Korea, squash is a strange sport, okay? But in Pakistan and then this part of the other part of the world, this is a very popular sport. So my friend Ahmad was very shocked, okay? He was from Karachi and then he was like, "Oh, Andy, how could you not know Jahangir Khan?" And I was like, "I'm sorry, man. I could not, I wish I knew him, right?" Anyway, by the way, the Ahmad was my great friend, and then we enjoyed a lot of curries that he cooked in the dormitory, right? And the curry taste was very different from the curries that I used to eat, which was my version of curry was Japanese slash Korean style of curry, whereas the curry that he cooked was original curry style, right? In Pakistani slash Indian style, okay? Very aromatic, okay? Anyway, so we enjoyed the discussion a lot of times, but this time I still remember, right? Jahangir Khan was such a great star in that part of the world, which was unfortunately not known over here in Korea, okay? So I was like very feeling even sorry to see, like, oh, I should have known this guy or something, right? Jahangir, right? At that point, 2002, the similar things that I could analogously, pick on him was this, right? Do you know Psy? Okay, remember this is even 10 years before Gangnam Style, right? But why did I bring him? Because 2002 we had a World Cup soccer game in Korea, and then Korea, for the first time in history, got number 4 position in FIFA this World Cup, right? Oh, historic ranking that we were all excited about it, and then we were all feeling like we are the champion, and then Psy was hitting right at the moment the right titled song called Champion. So let me play his song a little bit over here. 손뼉을 치면서 노래를 하면서 이건 고소 남녀노소 좌우로 흔들어 소리 지르는 네가 음악에 미치는 네가 인생 즐기는 네가 Like, do you know Psy? And then of course he did not have an idea about him, but eventually we ended up talking about some common things, okay? Jahangir Khan, well, last name is Khan, okay? That sounds familiar because Genghis Khan is there, like 13th century guy, who conquered all around Eurasia, okay, continent, starting from Korea all the way down to Eastern Europe, right? And then south, going down to middle of Indian subcontinent. And Ahmad told me that, yeah, of course, in that century, right, Genghis Khan, when he conquered Indian subcontinent, he left sons and daughters and here and there. And then the last name, right, survived, Khan. Wow. And in Korea as well, they invaded, and then we fought and fought like crazy over like 50 years, and then the whole Korean peninsula was taken over, except for one small island called Ganghwa-do, right, which is close to Seoul. But then a lot of people were mixing around, right? Racially, they were, interracial marriage happened. And then nowadays, Korean people have like something called Mongolian spots in their butts, right? So we had something common over there, Khan, yeah. So that was a resolution of our discussion. But the important thing is investor recognition. Jahangir Khan kind of guys must be famous in certain market, but other markets, he's not recognized. Okay, Andy Kim may be famous in over here, Sungkyunkwan University, some part of the world, small part, but other parts of the world, they will be like, who is Andy? Huh? Right. In some markets, the investors don't know about you as much as the investors in other markets. And the thing is, not only geographically, but also the type of instrument, type of the products that you sell, right? Depending on those type of the products, you may be famous in some market, but not known in other markets. For example, debt market, fixed rate versus floating rate debts, right? There's two segments in the market. The same company may have some different rate or cost of borrowing, okay, capital, and international variation, okay, may happen, okay. There is a lot of discrepancy, okay, depending on the investor recognition. And that brings us the idea about this swap. You're going to see it later. Remember the cost of debt, right? If you remember intermediate corporate finance class, right? We learned that the cost of debt should be risk-free rate plus some default spread, because there is a chance that the borrower may go bankrupt, right? Now this default spread should be a function of credit rating or the strength of your company's operating cash flow relative to your debt repayment schedule, right? This kind of framework of cost of debt is rather suitable for fixed interest rate debt market, okay? Fixed interest rate. What do you mean? Coupon rate kind of things, right? Periodic interest payment is fixed. Now, how about floating rate market? Okay, floating rate debt market. The benchmark rate in there is LIBOR kind of things. Okay, LIBOR, London Interbank Offer Rate. We talked about it. And then plus some spread. The cost of debt in that market is typically labeled as LIBOR plus X%. Okay, Euro dollar market or Euro Swiss franc market, Euro pound market. Okay, floating rate debt market works like this. Now the question becomes, well, we know this cost of debt for the same company has to be identical. They should give me the same number. But does that mean that these guys are the same and these guys are the same? The answer is no. No for both. LIBOR rate, first of all, is that a risk-free rate? That's not. Okay? I told you the framework or the mechanics of LIBOR rate. Okay? It's just a survey rate of risky banks. How much do you think your bank could borrow today? And your bank is, by the way, not AAA. Okay? Just British Bankers Association members. Thank God you are. But why not Shinhan Bank? This is the best bank in Korea, right? And then X% spread upon LIBOR. Is that a default spread that we talked about before? And the answer is no, because LIBOR already should have some default spread component in it, mixed with risk-free rate. You see that? So X is incomplete in describing those default spread. Okay. So ideally, the RD over here and RD over there should be identical. Okay. So much so that these two sums should be equal to these two sums. But there is some chance. And then it leaves a big room for discrepancy of, even in this RD sense, total cost of borrowing may differ for the same company. Oh, there must be some chance to make money out of it. That's the idea of swap. Okay, let's go there. Now, yeah. So investor recognition matters. In some markets, the investors don't know about you. You may end up paying higher cost of capital than your true credit quality. Okay? Incomplete information market is a problem right now. Okay? Incomplete information. It's not about market efficiency itself. Market efficiency, remember, all the information in the market should be reflected in the price, real time. That's about market efficiency. But when it comes to swap, and then all these debt market, international debt capital market. The issue is not about efficiency itself, but it's about the completeness of the information, which means the information about the existence of certain company, okay, may be incomplete, so that you are not known over there or some places, some market. Only the companies that were highlighted or popular in that region, in that segment, those guys are efficiently priced, and those guys in the dark that are not known, maybe, there are a lot of rooms, okay, of discrepancy in this borrowing cost, okay. So investor recognition matters, and then incomplete information market is a problem. So that is one important thing that I want you to remember. If you remember this, almost half of the chapter is already in your brain. That's good. The investor recognition matters, but the thing is, the company that is not known to a certain market, Jahangir kind of guys, right, in Korea, you are not alone. Yes, the Michael Jackson song tells us about it. The companies in analogous situation as yours, there are many companies facing the same problem, that, oh, I'm not known to a certain market, and you are not known to my market, and this kind of things, right? Companies in analogous situation as yours, there are a lot of them, okay, but it is just too difficult to find who is facing the same analogous situation or mirror image situation as yours. So who can search for that? Well, bankers, right? The bankers, they are the experts. Banking is about banking is about information business. Banking is about people business, not the money business itself, right? It's about who you know, and then taking advantage of this kind of information, okay? And you connect those guys, right? That's a swap bank's job, okay? Otherwise, this kind of non-banking corporations like Samsung Electronics or whatever companies, if they want to find out their potential partners, counterparty, who has the same needs as you in a mirror image situation, it's too costly to find those kind of counterparties. But the bankers get in there and then say, connect to you guys, right? So wait for that one. Some bankers may work as a middleman to find such company for you, match you guys, and slash the financing cost for you and the counterparty. This is called the swap market. So the chapter outlined the types of swaps, we're going to talk about it, and the size of this market, and then the swap banks, and then swap market quotations, and we're going to talk about it. A typical American book, right? The procedure goes like this. Find out more in detail, okay? Empirically, what you see in your newspapers, and then in real life, quotation works like this and that. Oh, how this works. And then the conceptual issues are discussed, like interest rate swap and currency swaps. The concepts are discussed, and then the variations of this are discussed, and then the risks of this market, and then market efficiency issues will be discussed in the latter part of the chapter. So let's go. Definitions, right? In a swap, two counterparties agree to a contractual arrangements wherein they will exchange cash flows at periodic intervals, right? There are two types of interest rate swaps. One is single currency interest rate swap, okay? Very simple single currency world, okay? US dollar, okay? Two counterparties meet each other. Fixed rate, one guy has fixed rate debt obligation, so you have to pay a fixed amount periodically, whereas the other guy has floating rate interest payment, so that your interest payment, will fluctuate depending on the market situation, right? And for some reason you want to exchange it, okay? We're going to study what makes you find out this kind of swap. Okay. Plain vanilla fixed for floating swaps are often just called interest rate swaps or IRS. Okay, IRS. It's not Internal Revenue Services. What's that? 국세청? No. IRS, interest rate swap. Cross-currency interest rate swap is the other kind of things. This is often called the currency swap, fixed for fixed rate debt service in two or more currencies. For example, US dollar versus euro, or Swiss franc to Korean won. Okay, all these kind of exchanges. Okay, swaps. Size of the swap market in 2015, the notional principal of interest rate swaps was 289 trillion US dollars. Okay. By the way, what is that notional principal? Well, the principal amounts. Okay. The principal, you know the principal, right? 원금 in Korean terminology. The swap is about swapping, exchanging the contracts. One contract is fixed interest payment based on certain principal. The other contract is a floating rate interest payment over time based on certain principal. Okay, so the this market size is about the principal amounts that is involved in this swap market. That this is snapshot figure, okay, or stock figure, okay, the notional principal that is involved with this swap contract. Of course, the cash movement, okay, cash payment, usually those cash payments is about the interest payment, not the principal amount, usually. Sometimes they involve the principal repayment swapped together, but usually interest, okay? So the notional principal is rather a big figure, okay, than the reality. Currency swaps was 22.7 trillion US dollars, and the market was growing very fast since 1989 or something, ever since that. The four most common currencies used to denominate interest rate and currency swaps are the euro, US dollar, Japanese yen, and British pound sterling, with the fifth most common currency being the Canadian dollar for interest rate swaps and Swiss francs for currency swaps. Okay, now the table over here shows the historic growth of IRS and the currency swaps. Notional principal amount since 2007 all the way down to 2015. Okay, of course it has been growing, was growing very fast up until 2011, the year of what is that, Greek debt crisis or sovereign debt crisis, and then since then the market has been shrinking a bit to 289-ish. Currency swap also, okay, but the thing is, even though there was a shrinkage of the market size, the basic trend, we would say, has been, vastly increasing. Anyway, now the swap bank, right? This is the middleman, okay? Swap bank is a generic term to describe a financial institution that facilitates swaps between counterparties. The swap bank can serve as either a broker or a dealer. As a broker, the swap bank matches two counterparties but does not assume any of the risks of the swap, okay? Dealer carries inventory. They take the risk, okay? They sit on certain exposure, 깔고 앉아 kind of things, right? The swap banks stands ready to accept either side of a currency swap and then later lay off the risk or match it with the counterparty, okay? Swap market quotations. Swap banks will tailor the terms of interest rate and currency swaps to customers' needs. So they also make a market in plain vanilla swaps and provide quotes for these. And since the swap banks are dealers for these swaps, there is a bid-ask spread. Okay, this a middleman. They have to make a living, make money based on bid-ask spread.